Hi everybody, just popped into the trading lounge. It's Saturday 3rd of October, so I thought I'd nip in, do a quick video before I go back and watch the rugby tonight. Come on England, Australia, so we've got to win that game. We've got to win that game tonight, otherwise disaster. We're out of the World Cup. Nobody wants that, so we really need to put on a good performance. But anyway, that's not what the video is about. The video is about what happened yesterday, which was Friday, and it was non-farm payroll day, and the figures that came out of America were absolutely terrible. They're estimating it's 203 employment, and the figures that came out were 142. Okay, so they were massively massively out of what they'd predicted. Now, what happened to the market? Well, it did this. It went, as soon as the news came out at 1:30, it went like that. It just suddenly, there was a massive spike down, and then what it continued to do the rest of the day was eventually it went up past a certain level of resistance here, and it carried on going up and up and up, and by the time Wall Street had closed yesterday, and of course the other markets, the FTSE 100 if you're looking at indices, and the DAX German 30, which I like to trade regularly, they absolutely flew up. They flew up. Now, can you make that out? The figures, the employment figures were terrible, and we expected, because of that, the markets would have continued to fall, but suddenly that buying activity propelled the market back up again. Now, of course, we are still in a downtrend, dominant downtrend, but we are in those months now where, leading up to Christmas, that October to March, April period of next year, where the markets tend to favour that period. Now, I've said quite a few times that I think that the markets are very precarious. We could be looking at a crash at any time, and it just suddenly happens. So we always need to be aware of that, but there's still going to be some good stocks that will do very well. And of course, from what we saw yesterday, is even though that news in America was bad, the markets decided to be contrarian and just started to climb massively. So Wall Street, I think it fell by as much as 350 points, and then it just recovered all of that back into the end of the day's session, which is 9 o'clock UK time. So quite a surprise. But what I wanted to actually say is the importance of having stops. So it was such a seesaw day yesterday, where it just went like that and then back up again, like a bungee jump, suddenly down and then back up. And the importance of having stops in place, because that was a real surprise. So in trading, we know you have to accept losses. You continue to always adopt the same strategy, the same system, but it's never 100% foolproof. You have to remember, it's never 100% foolproof. But the importance is that you've got to get out early, and you've got to know when to get out when the market is swinging back the other way. So yesterday, the important thing was, the learning of yesterday was that the market can suddenly swing back. There's suddenly all the buyers came in for whatever reason. That's what the market does sometimes, is then you just get out, and you know if the market crosses a certain point, such as what it did yesterday here, we were out. So the market was just looking like it was going to continue to trend down, and then it just suddenly went back up again. But the importance is of actually having stops in place is that you will not be hurt by that recovery yesterday in Wall Street or the DAX. You get out early and you accept a small loss, and then what that does is it will always keep you in the game, and then when the trades that you do make continue to run, then that profit massively overrides any small losses that you make. So that's what I wanted to say today. It was a very interesting day yesterday. Certainly it would catch a lot of people by surprise. I was certainly surprised that it went back up so quickly. It was a huge rally for whatever reason, but that is what the markets do sometimes. So look out for a video which I'm going to do about stop losses and the importance of that in your trading plan, because if you do get that right, then you will always do very well at it. But if you get it wrong, then you won't stay in the game very long. You've got to accept when the market turns, for whatever reason, you get out very, very quickly. Just accept the loss, small loss, and I do put tight stops in, especially if it's intraday, and then you're there to be able to trade another day, because there's always opportunities, and we'll let those winners continue to keep running, and then we cut those losses short. Okay, so look out for the next video where I'll be talking about stop losses and where to place them. And if you are watching the rugby tonight, then if you're an English fan, come on England!